Hello everyone and welcome to Day Trader S&P 500. Today is February 24th, 2021. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market timers. We've been around since 1997. At least we started Woodson Wave Report then. You can see our annual subscription, 233. It's a Fibonacci number, by the way, dollars per year. It includes monthly and interim reports as market conditions warrant. We also have a monthly subscription which gives you reports virtually every trading day for $144 a month. I want to get into a few things here. Let's knock that down. Before we forget, I want to make sure you guys remember to hit that the subscribe button, the reminder bell, and the like button. We appreciate your patronage to the channel. Thank you guys so much. And without further ado, here we go. Also want to let you guys know there's our existing website, there's our future website, and if you want to do our day trading service, we have a contract with Striker Securities. You can see here our 3-year track record with those short-term trades, and I average over 700 trades a year, so the futures are all moved to Striker, and you can contact them and they auto-trade the futures for you. Okay, we've got a lot to cover here. First of all, we'll get into the S&P. As you know, we put out the bullish and the bearish count. I want to thank you guys for all your comments and contributions. It's always nice to see what everyone else thinks. And you might wonder why I didn't pick or why I didn't say. One of the things my long-term customers, and we're talking 20 plus years, like is I always go ahead and say I think it's going up or I think it's going down. And when I'm wrong, I admit I'm wrong. And I've been wrong before and I'll be wrong again. And I may be wrong here. But that's what the subscribers like. A lot of people go neutral or don't say or don't know, or they say it can go up and it can go down, and then when it goes up or it goes down, they say, well, I told you it could. So anyway, we're going to be wrong. We know we may be wrong here, but we'll see. But anyway, the preferred count that I had to our subscribers was the bullish count, which is in black, which shows here. This is a 4-hour chart of the S&P. There's a November 30th low. There's one up, two down. They're the same. The bullish count has 3 coming in short of equality with 1, which is fine. It just can't be the shortest, and in this case it's not, because 5 is the shortest, okay? So 3 is usually the longest, but it can't be the shortest, and it holds true here. And here is wave 4, which is between a 50% and a 618 retracement, and the wave 5 up. And you can see here is 1, 2, 3, 4, 5 for 5. And that's 5 on multiple levels. That's just 2 levels, but it's most likely from the March 2020 low. That's the primary count. The alternate count is in red, where we've got, again, 1 and 2, 1 up, 2 down here, 3 up top just above the equality with wave 1. There's your 4th wave decline, wave 5 to new all-time highs, preferably our long-time standing target of 39.96, and this will come into play when this high is taken out, and this is 38.50, and the high as of today is 39.50. I apologize, and this high is 39.16. That's another reason why I didn't mind going short early. I'd rather be in front of this decline rather than behind it and chasing. And once it clears 39.50, we're most likely going to get short at 39.96 unless we see something that looks like it's going to go well above 4,000. So, we're going to be short for what, 40 points, which could be one day or less than a day. So, like I said, rather be in front of it. But we'll see how it plays out. Again, both counts are in play. The bullish count comes into play as soon as that high is taken out. I think I have that in summary here for you guys. Yeah, here we go. There's the wave 3 high in September, the wave 4 low, nice flat, 1, 2. There's 3. The black is the primary count. There's 4. It holds above the wave 1.5. Wave 1 high, and you can see it retrace a near perfect 618. And there's the other retracement levels, and there's 5, and there's 5. Alternately, this high on February 16 is 3. This is 4, and it could still go further before it goes up. But those are the 2 counts there in summary. Okay, there's another thing I wanted to touch on here, and that is the Dow made a new all-time high today. And I get questions all the time. It's like, well, the NASDAQ did this, or the Dow did that, or the Russell did this. What does that mean for the S&P? Well, contrary to popular belief, the markets don't have to all top on the same day. In fact, historically, they haven't. And I think I have that here. And I've got this on a daily chart going back to the year 2000. Yes, I was trading in 2000. For what it's worth, I was trading in 1987. I traded through all the bear markets and crashes. And you can see the Dow at the top here. And I remember this to today. It topped in January of 2000. I believe it was January 14th, if I can get this cursor on there. I remember that day specifically. It topped on the 14th right here. And you can see the NASDAQ in the middle here. It topped in March, virtually more than 2 months later. The same with the S&P. You can see I got wave 1 labeled there. So that was over 2 month difference. And if I can get to 2007, that may take some scrolling here, but the same thing happened at that high in 2007. Let me get there, and I'd like to get it to the middle. Catch up, computer. There we go. So in 2007, you can see that the Dow topped in July, and the NASDAQ and S&P topped. I thought it was late October. Yeah, late October. So that was 3 months later. Okay, so just because one market tops now doesn't mean they all top at the same time. It did happen in '87. It could happen this year, but it's not a requirement. Okay, let's get into. Let's see, what else do we want to get into here? Let me see. There's our trading accounts. I think we showed you that. We showed you that. Oh, yeah, I wanted to show you here from the all-time high so far. We've had a Fibonacci 5 down days. This is an hourly bar, so you can't see 5 red, but trust me, or you can look it up. It's 5 red days in a row and 145 points down. And then from that low, we had 2 days up, and it's 123 points up, and it's near the 786 retracement. Another reason why I like the bear count is because historically I've seen what they like to do is, okay, right here they're going to shake out all the bulls and take out all their stops and get them out of the market. And just when the bears think they got it all, they're going to run it up, 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 and take out all their shorts and get them out of the market before, bam, they pull the rug out from under everybody. Not saying that's guaranteed to happen, but the setup is there. Usually these second waves, they run them up anywhere at least 618, if not 786, if not 90 to 99% a retracement. Remember, second waves up cannot retrace more than 100% of the first wave. That's why that's the make or break. So we'll see where this plays out. Again, if it goes up and breaks 39.50, I'm looking at 46 more points, and then it goes down. So it's just a matter of when, not if. There is one other thing. Oh, I wanted to touch on GameStop. We had talked about that back here, okay? And you can see this is today's chart. It's a 5-minute bar, and GME was trading around 40, and after hours it went right up to almost 200, 199.91, and this is what it's done after hours. And believe it or not, I don't know if you guys watched all the testimony and all that. I watched every minute of it and all the commentary about it. I don't know if everyone was telling the truth or not. I don't want to accuse anyone of lying, but it's hard for me to believe that they got rid of all their short positions out in front of this move. I think there's still a lot of shorts out there, and we can just, well, let's go to a daily and look at this a little closer. And before I do that, I want to look at this Fibonacci, okay? I want to show you guys that even though they manipulate the markets, since they're human, they can't help but manipulate them in Fibonacci ratios and Elliott waves. You can see this is a clear 9 waves, which is a 5 multiple. It's 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's 5 waves up. So from here to there, and look, we get a retracement between the 382 and the 500. It still could do an A down, a B up, and a C down to one of these numbers here, but looks like it's going to go up from there. Like that's an initial. It's not an initial in the sense that, you know, this thing went up before a lot higher than 199. So let me remove that. Let's look at a daily chart here. I didn't think that game with GameStop was over. As you can see, and I remember this going on, that that 480 high is the during the regular trading hours. It actually went up to, I think, 508. Let me see if I can get I can't on a daily chart. Let me go to anyway, you can see that counted 1, 2, 3, 4, 5 right there, and that 5 is over the 508, which was the intraday. Let me go ahead and see if I can get a 60 minutes, see if I can get the extended hours in there on a 1 hour chart. Yeah, there it is. Let's see here. Come on. A lot. There we go. Let me make that a little better. And that's where that 5's on that 508. So you can see this did a perfect 1, 2, 3, 4, 5. And then it goes down in A, B, C. So the retracement did almost 100%, but not quite. It settled in at that 40 level. And here now we've got another wave up. Wouldn't it be something? I don't know that this is going to happen, but let's say this is 1 and this is 2. Let's just play it just to see if the game stop is over or if it's game on. Okay? I don't advise anybody to trade any of this stuff because it's the most volatile stock I've ever seen in my life. That includes Tesla. I've never seen anything go from 40 to 200 in hours. And then here we went from 40 to 508. But let's just see, just to have some fun with it, where this goes, okay? Obviously, since it almost retraced 100, the 1-to-1 ratio is right near the high. The high was 508. Believe me, I remember, I know. That would show 1.618 of 802, and just for fun, the 2.618 is 1275. Hard to imagine it could do that, but stranger things have happened, and who'd have thought it'd do this? But it's back in play. Late today, we'll go ahead and look at that 5-minute bar again of the action today. It is some crazy, crazy stuff. We'll get that out here, and you can see where that went. And no surprise, it went in 5 waves. But getting back to the main topic, we're looking at the S&P. We have both wave counts here. You can see 5 waves up in the primary count, 3 waves up in the alternate count. Either we break above the all-time high and go to 39.96, or we've begun the descent. And if we did, we began it with 5 waves down, 5 days down, and 2 days up. Both Fibonacci numbers, by the way. 3 is a Fibonacci number 2. Again, make or break, 39.50. All right, thank you guys again, and until next time, take care, everyone.